Hey traders, TG Watkins here. I wanted to show you another good example of some of the 0DT options and setups and the particular way that I actually use charts with 0DT and some of the tricks and trades that I've kind of found. Last Friday actually turns out to be a really good example for this. The context being that the market had been moving down for a little over a week. And then on Friday, because this was all tied to the government shutdown situation, on Friday, not only did the market kind of gap down and thrust a little bit more, kind of getting to a washout point, news started to come out that the politicians were starting to actively discuss dealing and negotiating with each other to finally reopen the government. And so if we look at this, there are a couple things that were going on. And what I wanted to kind of show you first is, when it comes to day trading, context is still really important, because even though you might be looking, really using the 2-minute or the 5-minute or the 15-minute, other time frames that you like, but down low, in order to figure out how the trend is actually moving and some of the parameters down there, you still need to know the overall larger position and situation of the chart so that you know if you can even be prepared for that or if there's something in the way. So, for example, the context for the SPX going into Friday was that the daily 50 was right there. And remember, daily 50 tends to be an area of support, even if it's temporary. Even the first time the price gets to the daily 50, it's probably going to bounce or something like that. Or if price has been sitting on the daily 50, it could do that and then fall off of the daily 50. So that's why it's important to know where overall price is. The other thing about context is if you look left, you can see that there was a really large price consolidation area, and you can see that is also where price came into. So there's a lot of congestion there, and there just from price activity there could have been some support. The other thing, if we keep working our way down lower, context was that Friday was an extremely down day. I mean, we opened with a gap down and then they continued to thrust it lower. And what I like to do is I have these Keltner channels, and you can see that price got really, really far outside of the Keltner channels and very far away from the moving averages. Now, honestly, on a Friday, I kind of thought, man, this is done for a Friday. Who's going to want to come in here and buy this, even if it is extreme to the downside? I thought maybe we kind of come down and it really just kind of meander into the close. But as I said, news started to come in and actually change the direction of the market. But it was still good to understand that we were getting extended on some of these time frames. Coming into support, extended on other time frames, and we could still see that extension here on the 15. Now, this is what we start to do, looking a little bit lower. And if you're just kind of watching the market and seeing what's happening, there were clues and there were signs and setups that the market wanted to turn around. And whether you knew the news or not, these are the things that I use to start showing up. And here's the 2-minute time frame, the 5-minute, and the 15. This is what I like to use for day trading. And once again, if you just look, like, what's the biggest thing that calls your attention? Right there. That is the Moxie price trigger. And what it denotes is when the Moxie indicator crosses above or below 0. You get red if it's below, green if it's above. Now, I get questions all the time from traders out there in YouTube and whatever. Hey, how's the Moxie indicator work for day trading? Is it good? And I say, absolutely. Everything that I do for swing trading or long-term trading with the Moxie indicator can also be used and applied to day trading. Okay, it works wonderfully. Now, the other thing you have to understand, because I actually just got an email about this. I had somebody saying, hey, the Moxie price trigger, the Moxie indicator, there's some nuance and it doesn't work every time. And what I try to tell people, this is why I have a 2-part rule, and I put this out publicly so that people who are interested in buying the indicator understand some of the rules getting into it. The Moxie indicator is a momentum-based tool. Okay, and so what that means is when you get the Moxie price trigger like that, it just tells you that momentum on that particular time frame has gone positive. Does that mean you buy it right here, right now? No, not necessarily. You have to have context. And this is where, as I said, I have a 2-part rule. And the rule is you need to have the Moxie indicator above 0, and you need to have price over the 50 SMA, depending on what time frame you're looking at. And what you can see here is you had price over the 50 SMA on the 2-minute, and the Moxie indicator was above 0. Great. Now you've got to move. And you can see that here, here's your Moxie price trigger, but it didn't get until here that price actually got over the 5-minute 50. And so that's when that move started. And you can see right there is where price pulled back into the 5-minute 50 SMA, and that was the move. You can be early on some of these things if you want. This is why I like to use multiple time frames, because if you were seeing this on the 5-minute, but you're waiting for the 50, well, you had an earlier trade right there. Like, look, if I take my cursor right there, you can see that the 2-minute setup here, and meanwhile, you're kind of waiting for the 5 minutes. So this is why I like multiple time frames, because you can actually start to see the exact entry or the earlier entry on these lower time frames, and all you're looking for is confirmation as you go up the food chain in time frames. So that was pretty nice, because not only did you have the Moxie price trigger right there, you had a double bottom right there, nice double bottom. And we had divergences and all that kind of stuff. And on the 2-minute, the Moxie indicator was actually giving you a bit of a heads up that this wanted to turn around, because notice as price went down, the Moxie indicator is going up. Kind of tells you something, doesn't it? And then you see price get over and then test the 2-minute 50. Moxie indicator's already up and doing great, and then up it goes. So that is ultimately what this looked like. And you see where price went is it went all the way to the 15-minute 50 and the 15-minute third ATR. So pretty big move into the end of the day. I think that there were some shorts getting squeezed. Of course, the market was down a lot on a Friday. Probably a lot of people were thinking what I was thinking, is like, oh, okay, today's going to be just a down day and not much going on. But then the news turned it around, and yeah, there were some big short squeezes like right there into the end of the day, as shorts didn't want to be short into the weekend anymore. And as you guys know, on Monday, since there was continued news about government reopening, Monday opened with a huge move to the upside. So this is where I communicated to the Moxie subscribers, said, do not be short going into the weekend, okay? Do not be short. So now that being said, let's get into some of the 0DT stuff that I wanted to show you as far as the charts for options. And this is what I have pulled up here. Maybe it's a little confusing at first, but basically you have calls up here and you have puts down here, and then I just have different strikes for the day. And for the most part, they're all saying the same thing. So I'm really going to kind of just highlight on a couple things. One, if we look at this, where the SPX, and actually let me do this for a second. Let's maximize this, because I want to be able to show you guys this at the same time. So let me get this, we'll maximize it, and then what I can do is take a screenshot here. And this one, just so you know, this is over here. If you look at this, November 7th, and it's a 650 put. Okay, so a little bit kind of around the money. I just want to give you guys some context about that. And if we come over here and we actually look at what was happening for the market that day, it's kind of looking through here. We'll zoom in a little bit. There we go. And what we can see is where this thing turned around. You can see that is where the market turned around. What was the put doing? Right there. It was getting rejected by the 2-minute 50. So if you're looking for some from context and you want confirmation, if you're looking at puts, this was actually a short for the put, meaning you could sell the put. Or it was telling you that if you're thinking, oh, is this market going to keep going down? No, the puts. And this is why I teach people, and I have the classes, if you guys are interested, about charting the 0DTE options. I don't know if a lot of people actually do this. I rarely hear anything about it. The only thing people talk about are just the options grid and the options chain for 0DT, but they don't talk about the charting like this. And what you can see is exactly where the put got rejected by the 50 is exactly where the price actually started to hold in through there. And you can see the next one was right here and here. Those are perfect areas that you look at this and say, man, if that were any other chart, regardless of options, if that was a stock, I'd short it right there. And that's how you know if you want to sell a put credit spread, that's how you know how to sell it. And then the same thing is if we come back over to the other thing. So let me back out on this and we look at the call. In fact, let me maximize this. So the call, it's a little bit later because you're waiting for them to actually develop. The put was the one that actually gave you the answer earlier. And this is why I like to have calls and puts open at the same time all the time while I'm looking for this, because amazingly, it's the options and the charting of the options that will actually give you a little bit of a heads up to what's going on. And in this case, it was the puts that were giving you a heads up. Right here was the bottom of the market. Nothing too obvious, was it? But it was right in through this area that actually started looking pretty good. And once again, if this were just a normal stock, if you didn't know this was an option series, if it's just stock, wouldn't you want to buy it right there? That's when the moving averages actually start going positive. You start getting over the 50, and right there you start to hold the 50. Now I know there's a dip, okay, but look what it does. It gets right back on track. Here it goes, and then it suddenly pops into the end of the day. And that is the crazy thing about these 0DTEs, is that they will kind of incubate for a while. And then once you actually start to cross into the strikes, boom, they become valuable because it's towards the end of the day. The likelihood of these things actually closing in the money is pretty slim. So there's the pricing of them is still low. And until suddenly at the end of the day, oh my gosh, they're now in the money or have a higher potential to be in the money, and then suddenly they become valuable. And that's kind of the crazy thing about these things. So let's just say right around here is where you would have set up an entry for this, and look what this thing does. Up at the top, 622%. Not too shabby. And you look at the price, it's right around $5. You know, I always talk about $3 to $5 is a pretty decent place to get in for looking long on calls or puts, you know, just looking long on 0DT options. Gives you a healthy balance. And you can see here, yeah, 600, well, gosh, you really want to be precise. It went up to 681%, you know, give or take. These percentages change a lot based on where you actually get in because the numbers can move a lot. Now, let's say if we went something further out. And you can see here, this was a 6,700 call. And you can see this is why going further out of the money can be a little bit more risky because it just doesn't want to go anyplace. Even though the market was going up for most of the rest of the day, you can see how this thing just did not appreciate in value until the very, very end of the day when it finally suddenly exploded. And that's because the likelihood of this strike, the 6,700 strike, closing in the money in the last hour of the day, you know, nobody's planning for that. And it only suddenly became valuable once it actually finally did cross over and close up there. And then it became in the money and valuable. So let's just say for all day, it was kind of hanging out around $2 and change. So let's kind of say you got in right there. Again, this was the risky one. I wouldn't say that this was likely to happen, but I just want to show you. You get in at about the same spot and look where it closed. 800%. So yes, higher percentage, but less likely to work. That is the trade. That's the balance that you want to do about I will spend more to have something happen more likely, or I can spend less. And if it does happen, I will make more percentage, but the risk is higher because it might be far out of the money and may not actually appreciate at all. So that's a little bit of the pros and cons of this situation. And again, another way to look at calls and puts to kind of help figure out how the actual market is going to move. And you can see right here, the put was actually giving you a pretty good idea that this market was going to start moving back up. Okay, so anyway, hope you guys enjoyed that. Remember, simplertrading.com/Moxie, and that's where if you guys like what I do, if you want to come into the trading room and actually learn a little bit more from me, that's where you can find more information about me, and I'd love to see you guys there. Drop a comment in the chat room when you guys come in, and let me know, and I'll answer any questions that I can do for you. All right, guys, thanks again. See you soon.